Robert Kiyosaki warns of a big market collapse, and many other high up in the financial game are warning of a huge market collapse. In today's video, I'm going to show you the hidden tracks or the hidden cracks, that we are not taught in school. Economics does not teach us to look at these types of reports, nor does the economic advisor for Biden even understand how bonds work properly. He said they were confusing. You can watch the video yourself. He said we print money and then we buy bonds and then we sell. It's confusing. That's what he said. It's not that confusing. It's pretty simple to take a look at. So my goal is to break down the simplicity of it and then share with you exactly what I'm doing so you can make an informed decision. So first, I'm going to show you a very boring report. I'm going to show you Robert Kiyosaki's tweet, and then we're going to go deeper and listen to, well, he's a gold bug. He's not into crypto, but this is a reason why. This is a reason why there was a switch. Boom. To Bitcoin is a flight to quality. This is exactly why. I'm about to show you the hidden cracks in our financial system. Okay, so this report right here is the not M2. I've been showing you guys M2. This is the 2-year treasury. Okay. Now, what I want you to look at here is I want you to look at these gray lines. You can't see my pointer there, but you'll see these darker gray lines. You got these represent recessions. Okay. So let's go to the part that we've lived through as most of us watching this as adults. We had the recession of 2000. We had the dot-com boom or dot-com bubble, right? And then we all went through right here, which is the 2008. Now, do you see how this is declining right here? That's because of low interest rates and printing of money. So when you print money and you have low interest rates, longer term bonds have a lot more value. Okay. So we went into 2020. Okay. Then they turned the printing machine on full blast. You see this thin line right here? The 2-year treasury, the true year treasury yield became very unattractive because they're printing tons of money, devaluing the currency at low interest rates. So banks and people were purchasing a lot of long-term bonds, but something dramatic happened 27 months ago. Pay attention. 27 months ago, boom, the bond yield inverted. Okay. They pumped the brakes on the printing machine. They raised interest rates to try to cool inflation, and it flipped the bond. They inverted. The bond yield inverted, making 2-year treasuries much more attractive. So now, if you're a bank, you're sitting on all this monetized debt that is way less valuable. Now, you may think, see how this line is going up right here? Okay, this is starting to go back up. The 2-year treasury bond became really popular because of the inverted bond yield. But what happened just recently is it reinverted. Now, a lot of people think that means, hey, we avoided a recession. It's the exact opposite. If you look back at 27-month periods, after the 2-year becomes more popular than the 10-year, we usually go into a deep recession. So we also have the job markets faltering. We got Jerome Powell going to be lowering interest rates probably next week, right? Coming up next week. I think it's next Wednesday. He's going to lower interest rates. So again, making your cryptocurrency more valuable. People are going to move out of cash into assets. This is an organic thing that happens over and over again. The difference is in America is that we're in a failed financial system. We have more debt than we have income. Okay, so let's get over to what Robert Kiyosaki said. So I wanted to show you that report, and I want to go a little bit deeper with you guys because this affects you as a crypto investor. It affects the stock market. It affects everything we do. It's very important to understand this stuff. That's why I don't lose faith. That's why I don't panic. I do the opposite of the 99%. When people are running from assets, I'm buying them. When people are running in to get rich quick, I'm selling you, and I bring it down to tier 1 capital. Okay, the bond market is crashing. Do you realize the world's economy is based on debt? We've taught you guys that on this channel for a long time. A bond is debt, and the whole world is floating on it. And this collapse signals deeper economic troubles. While the market crashes are visible, market crashes are visible, banking crashes are hidden and much more dangerous. And I'll break that down a little bit further. It's one reason I'm investing, pay attention, in physical assets like gold, silver, Bitcoin. I'm a hardcore believer of gold and silver, real money, not fake money. I agree with him. I got silver. I got Bitcoin as my gold. I'm using Bitcoin as my gold, and I like tier 1 capital. That's what I use personally. So let's go a little bit further here. Okay. So the bond market yield curve returns to normal from inverted state that had raised recession fears. Okay. So People think it's opposite. They're like, oh, great, it's reinverting. But no, family. An inverted yield curve in which the near duration yield is higher has signaled most recessions since World War II. The reason why shorter durations rose over the longer duration counterparts is essentially the results of the traders pricing slower growth into the future. However, key, a normalization of the curve doesn't necessarily signal good times ahead. In fact, the curve usually does revert before a recession hits, meaning the US could still be in for some rough economic waters ahead. So here we are. Boom. Let's put ourselves right here in this position. They told us the job markets were phenomenal. Lie, lie, lie. Told you guys it takes a while to get a post-pandemic, or the post-pandemic economy was coming in. Q3, boom, they're rocked. August started to falter, or July, we started to see the falter. August, we started to see the falter. I guarantee September numbers are not going to be good. They're going to lower interest rates. We're buried in debt. The consumer credit index is at an all-time high. Consumer savings are drained. 19% of inflation. Middle class can't even survive right now. So now the bond yield is reinverting 27 months pattern that is going to show us going into a deep recession, right? We're already in a recession. You guys can feel it, right? You can feel the groceries are higher. I went to go buy chicken yesterday, just plain chicken. It was $9 for a rotisserie chicken chopped up in a little bowl. $9 for chicken. I was like, holy shit. I remember paying like $3.50, $4, maybe $5 for that. It's almost double what I paid before. Okay, so we're gonna watch this video right here. So Peter Schiff, he is a gold bug. But again, you got gold, you got Bitcoin. So let me switch this over. We're gonna listen to what he says about the economy, and then I'm going to break down a little bit deeper around the bonds and things like that, and what I think is gonna happen. Now, don't make any financial moves, but I've made my moves based on historical patterns, and I feel like I'm on the right track.
Now, what would happen if interest rates debt? That's impossible. Go back to Paul Volcker in the 1980s. I mean, we have a bigger inflation problem now than we had in the 70s. And to bring that inflation to an end required 20% interest rates.
Whoa.
Now,
this is so important what he's about to say. They were able to, because we had a healthier economy, they were able to raise it to 20% interest to fix it. But listen to what he's about to say. This is a completely different economy. They cannot do that right now. It will wreck the economy. So they're literally on a tightrope right now. Hence why Bitcoin is now part of the presidential campaign.
What would happen if interest rates went to 20% now? I mean, we got up to 5%, right? Imagine if they got up to 20%.
Destroy it.
Well, we've got a $35 trillion national debt.
There you go. So pay attention. This is financial literacy right here. Because of our debt, it changes the whole game. It is a new ball game. We have more debt than we have income. So every decision they make is freaking big swings now. They're going to lower interest rate and start monetizing debt once again. That is going to devalue the dollar. Now we got BRICS trying to de-dollarize. We got all this stuff happening that is, and the dollars, everybody thinks the dollar is just going to come collapsing down. That would take the whole world down. There is a big transition coming though.
That's financed with treasury bills. Even if we had to finance that at 10%, that's $3.5 trillion a year in interest on the debt. The U.S. government only collects about $4 trillion a year in taxes in total. So we have so much debt.
Did you catch that? They collect in taxes less than the interest on the debt. So where are your taxes going to? It's going to pay debt, guys. And most of the debt is held outside the United States.
Imagine what would happen to all these corporate bonds if their debt matured and they had to refinance it at 20% or anywhere close to that, or home mortgages that got up 10% or 12% or 14%, something like that. I mean, we now have so much debt that if you tried to raise interest rates high enough to get rid of inflation,
can't do it.
Everything would collapse, which is why they're not going to do it. We are stuck with inflation because the alternative is a political non-starter. Because if the Fed actually got rid of inflation, you would have a financial crisis that would make 2008 look like a Sunday school picnic. And
Okay. So I'd respect impact theory. I go watch that whole interview. It's phenomenal. And Peter Schiff is super against cryptocurrency. He goes back and forth. He's into gold. I love silver. Bitcoin is my gold. Some people push back on that. That's what I do. But I only share with you guys. I only ever share with you what I'm doing. Okay. So let's go back to the bonds. Okay. So 2022, we saw the bond yield invert, which is it's about 27 months ago. You saw the bond yield invert, right? And so that sucked the liquidity out of the banks. Then we started to see, am I getting the dates wrong? I'm sorry, but if I get the dates wrong, I apologize. Then we had Silicon Valley Bank. You guys all remember that what collapsed, right? But remember, Silicon Valley collapsed. That was all the big tech companies, all the different things. They were super over leveraged, right? So now what's happening is they turn the printing machine off, they raise interest rates, right? And then all of a sudden in 2023, Larry Fink's like, shit, Bitcoin's a flight to quality. Made a mistake. We're building an ETF. We're going all in. Now they're the number one holder of Bitcoin in their ETF. MicroStrategies is the number one holder of Bitcoin. Vanguard and BlackRock are in the top 3 holders of MicroStrategies. Okay. Something is changing. You need to do your own research, but go deep into this. There's a reason why Robert Kiyosaki, there's a reason why Michael Saylor, there's a reason why Larry Fink, there's a reason why Elon Musk brings up cryptocurrency. There's a reason why some of the biggest asset managers now are scrambling to get involved in Bitcoin, because the financial system cannot sustain itself. Jerome Powell, if you don't believe me, Jerome Powell, the head of the Fed, said this is unsustainable. This is a completely different economy, guys. This isn't the 1980s when my parents went through high inflation. Their interest rate on their home, I think, was like they bought it for $25,000 in 1973. And I think their interest rate around the 80s was in the 17s. Don't quote me on that, but they had a super high interest rate on their savings account, right? We can't do that. They can't do that. All debt's monetized. If they raise rates, if they keep raising rates, we're done. The Ponzi scheme collapses. We have more debt than we have income. Okay. So remember that debt is income in America. Bottom line. So are you going to continue to stack money in your bank account in a fiat currency that is fake, or are you going to move into something that is a real world asset that will be here for the future? Okay. So here's exactly what I'm doing. I use what's called the risk pyramid. On the left side of the risk pyramid, as you go up a risk pyramid, it's high risk, high return. Okay. Now, cryptocurrency, you got to be careful. It's in the speculative phase. It's very high risk, super high return. And we're heading into a bull run in about November 2024. We're a couple months away, right? So I've been accumulating since 2022, 2023, 2024. Here we are. And then that starts skyrocketing up. I pull profit on the way up. Okay. As everybody's rushing in to get rich, I'm selling you my crypto, I exit 50% of my portfolio. I'm holding 100% of my Bitcoin. And I'll explain that in another video. As I take profits, I pull it down the risk pyramid. As you go down a risk pyramid, at the bottom, you have things like bonds, what we're talking about. I'm not putting my money in bonds. Think about this. Like, if we're all debt and this is unsustainable, a bond doesn't sound very safe to me. And the reason why they say it's tier 1 capital and some of the safest capital is because it's backed by the government. Backed by a government that is buried in debt. Like, that doesn't make any sense. Like, what if they can't honor that, right? So, but bonds are on the bottom. You have insurance is right in the middle, right? That's why, and a lot of people ask the question, what if the US dollar collapses? I guarantee you, insurance companies will not collapse. Try to find an insurance company that need to be bailed out. There was one, which was AIG, but it wasn't the insurance side. It was the mortgage side. And you can't commingle funds, right? So they couldn't use their insurance side to pay off the mortgage side. So that side collapsed. The insurance side was solid. Insurance is the last resort. Banks own a ton of insurance. Wealthy people own a ton of insurance, okay? So I insure my money. That's what I do. Think about that. If insurance collapses, we have a lot bigger problems. Think of a zombie apocalypse. You're not going to be worried. If insurance collapses, you're sure as hell not going to be worried about your money at that point, right? Because you got the FDIC with the bank. If that comes down, then you got the next banks have insurance, right? So it's really important to understand that crypto is very speculative. It's in a very speculative phase right now, and it's going to be in speculative phase probably till about 2030. The great news in that, if you're a calm, strategic, and you have a game plan, you could do very well. But if you're emotional and you're trying to win the lottery and you're trying to get rich quick, you're going to get wrecked 100% of the time, because Wall Street wins. They play on your emotions. Okay, so number one, you got to build a solid game plan. Solid game plan. Number two is you got to have an exit strategy. Number three is you got to learn how to fish. You got to stop trying to get, oh, give me the fish. No, learn how to fish. Financial literacy, financial discipline. Okay. And lastly, you got to understand how to protect that wealth. So important. Okay. Now we have to start to understand what is about to happen. So here's what I think is going to happen is I think we're going to have the presidential election, right? Then the Bitcoin's going to go straight up, and, October will start to go up. You'll see the September 17th and 18th interest rate decline, the lowering interest rates is already baked in. The markets have probably baked that in. So we'll see a little blip, and then October we'll probably just start to see crypto go up, and then November it's going to go straight up. It's, I believe, November, December, January, February, March, May. Remember, write this down. Sell in May, go away. In May, everybody seems to exit and they go away summertime, June, July, August, and then we'll probably see an uptick in the back end of 2025. Okay, that's crypto. And then we go into 2026, we'll probably see a collapse and we'll have a bear market for 4 years. The stock market, though, with this problem with the bonds and the secret underlying problem with the banks, we might see some sort of stock market collapse, a big stock market collapse in between 2025 and 2026. Okay, I'm not heavy. I don't really have hardly any stocks. I'm mostly in cryptocurrency, insurance. We're getting into real estate. I've a lot invested in businesses. So what I'm really good at is business. I'm good at insurance. I'm good at cryptocurrency and a little bit of precious metals. Those are things I'm good at. I don't play any other categories and I'm not good at. But yeah, that's what I'm doing. So it's just about mental preparation, understanding what this is. But again, I don't want to give people a fish. I want to give you a fishing pole so you can learn how to fish. And I truly believe this is the greatest opportunity in human history to build wealth for your family. I really believe that. But you can't keep doing what our grandparents did and what our parents did. The tides are changing, guys. So I love you guys. I appreciate you. If you need any support at all, if you click the description of my video down below, you'll see a needs assessment. Okay. So we get hundreds of messages on how I ensure my wealth. But the important part is, what do you need? That's the important part. So it's a needs assessment. If you have questions about how I ensure my wealth, I have a team that can help you with that. But it's important as we go through the needs assessment to understand what your needs are. Okay, where are you at financially? Where do you want to be when you retire? And so if you fill out the needs assessment, my team will call you. They will text you, they email you. We do not invest people's money. We do not have a crypto platform. So those are all scammers reaching out to you. You'll never send my team member money. It is a free consultation. Okay, so in the description, or if you click my social media platform. So if you need any support or need to have a conversation, it's absolutely free consultation. So I love you guys. I appreciate you, and I'll see you on the inside. Warriors, rise, get your shit together. Let's go.